Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and today I got a bit of a mixed bag. I wanted to clear a couple of things up because I saw there was a little bit of confusion going on with the S&P, the chart, the cycles, the trend lines, which one is important. So I'm going to quickly explain that. I also want to talk quickly about the bond market and the implications for rate cuts, because one of you pointed out something that I had missed. So I'm going to touch on the thing I had missed and explain that. Then I want to point at a few things that I just got this weird feeling about. As I'm reading a lot of the Bitcoin news out there lately, just some of it just doesn't make sense. A lot of it doesn't make sense. So I'm going to just give you my thought process on that. Then we got a couple of very bullish implications for Bitcoin, which I'll show you as well. And then, as always, we'll have a quick look at the charts. Since it's Friday, I'm mostly going to save that for the weekend's deep dive, as always. And me and Kemazabi are going to be going live tomorrow to examine the weekly closes and look at the bigger picture, because it's been a little over a month since we last got together. So there should be a live stream for you guys tomorrow around evening time, GMT. So without further ado, okay, we continue to see the Olympics mark some wild stuff, okay? We continue to see craziness unfold around the Olympics as expected. So we've now got the high-speed rail lines being sabotaged and vandalized and whatever else. And I largely suspect this thing is going to continue to play out. Of course, it's the opening ceremony tonight. So if you know, you know. As I said, I want to talk about the bond market and the implications for rate cuts, because I had not considered this. I had not considered this at all. So if we go to this is the US 2-year yield. Okay. Now, if you've been familiar with my work, you know I've been saying over and over again, okay, tell that to the bond market. And what that means is when the 2-year yield sells off like this, okay, it is the bond market in aggregate, which is largely driven by central banks that always know ahead of time, pricing in the expectation that cuts are coming sooner rather than later. And so all the way back here, I was saying, you know, if we see the 2-year yield sell off down into this neighborhood where we are today, then that would essentially be us pricing in a much higher probability than most people realize that we will see a cut in July. And largely speaking, I was suggesting that if we got down here, what this would be is the 2-year yield pricing in a 0.25% cut for July. But one of you clever guys suggested to me that if we don't see the cut in July, and in fact the CME is right, because the CME currently has us around 90% probability, 93.3% as of the time of recording, that we will be remaining paused at July's FOMC meeting. And so it raises the question, doesn't it? And like I said, one of you pointed this out to me. Are we, in fact, rather than pricing in a 0.25% cut for Wednesday, for July's meeting, is this the bond market pricing in a 0.5% cut, okay, for September's meeting? Is that what we're seeing? And did I just completely miss this as an idea? Did I just completely forget to think about maybe this is what's going on? As it stands, we don't really know. And as it stands, we could still go either way, right? Just because the CME is heavily weighted one-sided doesn't mean that we can't see a cut in July. Either way, I don't think it changes much, okay? Because ultimately, we're still going to be looking for cuts to show up by no later than September, and we're still going to be looking for the market to top somewhere around the 2-month either side window of the onset of that cutting cycle. I will say this, if indeed what we are seeing here is them price a 0.5% cut for September, okay, which means we remain paused next week on Wednesday, and then by the time we get to September, they announce the first cut is going to be 0.5%. That, to me, based on all my knowledge and experience, would suggest that by the time we get to September, they have realized they are late to cut. Something may well have broken by then, or they're going to have seen a few CPI prints and realize, oh no, okay, we're already heavily disinflationary, we're already on our way to deflation, and thus they're going to be trying to slash rates very, very quickly from September after they make the realization that they are late to react. So if anything, I think we should probably be championing, hoping that we see a 0.25% cut, because the market can shrug off a 0.25 percentage point in July. The market can say, okay, the Fed's actually being mature in its stance here. It's easing into the cuts. It's certainly not too early to see one cut. And I think this would give the market plenty of hurrah to think, okay, easing is coming. We can have a nice rally. But like I said, I think if indeed we are pricing in a 0.5% cut for September's meeting, then there's a very good chance by the time we get there, it's already going to be way, way, way too late. And thus, instead of see September be the onset of the cutting cycle and top 2 months after, we may have already started topping into this September rate cut. So it's going to be very, very wild. It's going to be tough to navigate as always, but we'll just keep taking it one day at a time and seeing what the market can give. I left myself this here, the SPX, as a quick reminder, because I saw quite a lot of confusion from people. People were asking me, well, Camel, have we lost the second angle? Which if I move this arrow out the way, you can see just about we have. People were saying, does that count as major invalidation? Or are the cycles king here or whatever else? So I thought I would just quickly clear this up, okay? The reason I use Trendlines is because Trendlines give me the fastest response to changing price action, okay? If we start to break down, we see it in the trend line, okay? And we can react immediately to that. Similarly, if it's going to break out to the upside, the moment the price crosses the trend line, I can get straight in. I don't have to wait for oscillator signals to flash. I don't have to wait for any kind of MACD crossovers. I don't have to wait for moving averages to turn up or any of these sort of lagging indicators. The moment we get a breakout, I can respond immediately. So I like trend lines because they give me instant response to price. But I don't just like to use trend lines and nothing else because trend lines often fail. We often get fake breakdowns or fake breakouts, and that is why I like to use cycles in combination. And so by having an awareness of where the cycles are, okay, we know we're right in the timing window now to see a daily cycle low for the S&P, for example. So any breakdown here tells me, okay, that it is not to be trusted. Now, it doesn't mean it couldn't morph into a look where we see a cycle low roll over and fail, and then this would be breakdown, retest, resumption, okay? But given how we are so close to the timing window for the cycle low, it tells me that the probability this is a real breakdown is very, very low. Similarly, if we were very, very late in this weekly cycle and we saw some kind of top here and it broke from a trend line, given how late it is in the weekly cycle, that would tell me not to trust the breakout because we know a weekly cycle low is due. So the cycles provide very, very key context as to how trustworthy or not the trendline breaks are. And like I said, given how we are right in the timing window for a daily cycle low, that tells me that this breakdown of this second angle is not really to be trusted. It's not as significant as people might think, and it speaks more likely to being a trap. Now, with all that said, we actually saw this exact same setup, and you saw me use this exact same technique in real time just a couple of weeks ago with Bitcoin. So significantly messier chart here, but hopefully you can see our first angle in red, okay, our second angle in red, right around the 6th of July timeframe, we broke down from that trend line. And a whole heap of people were saying, Camel, that's invalidation, no more left translation, insert narrative here, okay? Insert bear case, that is the top, blah, blah, blah. And I said, look, it doesn't make sense to be crying about a trend line breakdown here because we were right in the timing window for both a daily and a weekly cycle low. Okay, and so I said, once we found the cycle low, then we give it some space to see if that cycle low holds or fails. And as you can see in Bitcoin's case, okay, it was a very, very powerful tool to use to know that whilst everyone was jeeting their bags and panic selling on a trendline breakdown, the context of the cycle lows told us that this was not to be trusted, okay? This was most probably a trap, and indeed, in this scenario, it turned out to be a trap. Had that second angle violation occurred early in a daily cycle or early in a weekly cycle, okay, somewhere in this neighborhood, then we could have said, okay, we can trust the breakdown because there are multiple daily cycles left in the weekly cycle, or at least multiple sessions left in the daily cycle. But when it broke down here, right at the end of a daily and weekly cycle, also right in the timing window to see a daily and weekly cycle low formed, again, it told me to not be trusting this breakdown whilst everyone was sort of panicking and selling and saying, well, that's it, invalidation's been hit. So we've seen this scenario. You saw me deal with this daily in real time. And frankly, it's the exact same setup here for the S&P 500 right now. Yes, we've got a second angle violation. Okay, yes, on a closing basis, but also we are right in the window to see a daily cycle low, and thus it's not a trustworthy breakdown. Like I said, we know how to deal with this, right? If we find a swing and we come up here, happy days, long and strong. And if we end up morphing into breakdown, retest, resumption with a failed daily cycle, okay, then we've got true technical breakdown, as I said in yesterday's video. Then at this point, you see me exit the market and stay out the way of it, at least until we find the next daily and weekly cycle low, and possibly even beyond that. So I hope that clears that up, okay? If we have a breakout occur, it's always good to see where we are in the cycles, because the cycles can tell us how likely it is that those breakouts are trustworthy or for real versus how likely they are to be fake outs. In other news, okay, if you know, you know. And what is it that we know? The US economy is pulling off something historic, okay? The economy is about to stick what's called a soft landing. Now, if you're a newer viewer here, then you probably won't know why this is so significant. But any of the channel OGs, anyone that's been here for longer than 6 months, has heard me say this a million times. Towards the top, towards the third angles for the stock market, and hopefully for Bitcoin as well, we should start to see the proliferation of a soft landing narrative. We should start to see this become consensus. And I think, even though there's a whole heap of bears and top callers out there at the moment, okay, even though there's a whole heap of people that say, like, that's it, that was the top, and now we're going to enter some big corrective phase, or at least base sideways for months. Same for Bitcoin. I see a lot of people saying, yeah, well, this is distribution. This is distribution, and we're going to continue to base, or when the cuts come in July, we're going to see this crash and sell off, just like we saw back in the C19 era, right? When we were back here, we reached a quick pop to 14k, and then we kind of had to trade all the way down to 3k before basing back, and then eventually we went. I've seen a lot of people in my comment section saying this is what we're doing, and actually this cycle is nothing out of the ordinary whatsoever. And of course, to that I simply say, you are predictable. We predicted you would come into the comments and make those exact comments months and months and months ago. Again, if you're an OG, if you're a long-time viewer, you know exactly what we're talking about. And the interesting thing, I think I mentioned this a few videos ago, is if you look at the polls on Wall Street, right, the street analysts are sat in around 90% looking for either a soft landing or no landing, with only about 10 or it might be 11% of analysts on the street looking for a hard landing. So if you're one of these people that says, yeah, this bull market's going to keep going, this bull market's got legs, we're going to run into next year, I hate to tell you it, okay, but again, you were predicted. Your attitude, your sentiment towards the market was predicted months and months ahead. And this is most probably going to continue to proliferate, okay? Once the top callers realize this is not the top, once we find a cycle low and then start to rip higher, you're going to see a whole heap of people flip to permable. You're going to see in this neighborhood, this is exactly where you'd expect them to say, okay, super cycle's here. We're going to continue to run well into next year. Liquidity is going to keep increasing and all of that jazz, okay? But we'll be very stretched in the weekly cycle, looking for quite a severe downturn into that cycle low. And then we'll also be looking for the next weekly cycle to fail, most probably, okay? Especially given the whole backdrop of the rate cuts, whether they come next week or in September is neither here nor there, okay? The charts are the charts, and the charts seem to be pointing at something like this. Like I said, this has been the call. It continues to be the call. And not only that, all of this sentiment about an extended bull run, okay, a super cycle for Bitcoin, a soft landing, that was predicted well in advance as well. So I continue to sit here and say, until something changes, until invalidation occurs, then I stand with my posture, I stand with my hypothesis and my analysis. And we're just going to keep pushing this thing and seeing what the market can give. As I said at the start of the video, okay, things keep getting weirder and weirder every time I wake up and scroll through Twitter. First of all, for some reason, X has removed the Bitcoin hashtag emoji. So you used to write Bitcoin with a hashtag and get this little emoji, of course, and now you don't. So that's kind of strange. I don't know if there's anything to read into that or not. But things start to get very, very strange for me in this Bitcoin space at the moment, because I keep seeing these kind of news-driven Bitcoin accounts and crypto news accounts. They seemingly have just forgotten how to quote sources or have anything of value posted anymore, okay? We're seeing things like this. The US is going to hold 9 million Bitcoin if elected to power, right? And that doesn't even make sense. That's over 50% of the supply, right? That's over 50% of the real supply. I know people say, well, no, there's 21 million. There isn't. Take away 1 million for Satoshi, take away about 3 million that are lost forever. We're down to around 17 million. Now, of those 17 million, only 2.5 million are actually free float. And 70% of the entire supply is long-term hodls. So how on earth can they make a claim like they're going to hold 9 million Bitcoin? Where are you going to get 9 million Bitcoin from? There's no way. It doesn't make sense. Make it make sense. But for some reason, we just keep seeing things like this. And I realized as well that, you know, we're seeing all these rumors that the US might move to hold Bitcoin as a reserve currency, or that they might add Bitcoin to the Federal Reserve as a strategic reserve asset, right? We're seeing all these kind of speculations. But again, the more you think about this, the less sense it actually makes. If you were planning on acquiring a significant chunk of Bitcoin, and especially if you're the Central Bank of America planning on doing this, would you telegraph it to the rest of the world first, ahead of time, and then buy your position and allow people to front run you? Or would you not get your position first and then announce it so that the market can pump your bags, right? Like it doesn't make sense to telegraph a move like this. And like I said, there's so much speculation out here. There's all these sweeping claims. This is going on mainstream media. Then there's stuff like this, which is just basically impossible. How on earth are you going to get 9 million coins? It's impossible. So there's a whole heap of weirdness going on. It is the Bitcoin conference today. So we're going to find out some news from that, hopefully, in the next few days. For now, at least, the Bitcoin price seems to be responding okay. So we're going to find out, right? We are going to find out. But I can't get away from the fact there seems to be a whole heap of weird and wonderful games being played at the moment. But with that said, from the weird and wonderful games to things that make a lot of sense, okay? Jersey City is going to buy Bitcoin for the city's pension fund, according to the city mayor. So this is a very big step. And this makes a lot of sense in my mind, especially when we look at what is termed here one of the most scary charts we've seen in a while. Okay, what we see here in the yellowy gold color is unfunded pension entitlements as a percentage of GDP. And in blue, we have the private or funded entitlements as a percentage of GDP. What you'll notice is all throughout Europe, okay, the pension money you are hoping that you will receive when you retire simply doesn't exist, okay? It just doesn't exist. It's not there. And not only is it not there, as a percentage of GDP, you can see it's trading in the multiple hundreds of percent above your country's GDP. So this is absolutely crazy. The pensions just don't exist. They're entirely hocus pocus. They are smoke and mirrors. Now, for the UK, I don't know what it is in terms of as a percentage of GDP, but I do know that we are somewhere in the neighbourhood of 40p in the pound is backed, which puts us in a similar kind of ratio to Switzerland here. So in the UK, there's a whole heap of people that are counting on getting their government state pension, right? And there's a whole heap of people that hold pensions in other shapes and forms and sizes. But the reality is only around 40% of those pensions actually exist. And around 60p in the pound of the UK's pension system is not backed. Okay, it's not backed. So this is one of the reasons I'm such an advocate for holding things like gold, physical silver, and of course, cold stored Bitcoin, because that whole pension system simply doesn't exist. But one way they could potentially undo the leverage in the system, one way they could potentially fix this is to print money and buy Bitcoin with it. Because by debasing the currency against Bitcoin, number goes up. And if we only make one assumption that Bitcoin continues to do Bitcoin things, adoption will continue, network growth will continue, and ultimately it will continue to outpace inflation, okay? It will continue to be the world's only representation of true digital scarcity. Then over time, they actually might be able to plug some of these holes and recoup some of these deficits using Bitcoin. Now it's speculative, but if you've got a better idea, let me know, okay? I don't have a better idea. I can't think of any other way I would want to do it. I suppose you could do it with gold. You could stack up a bunch of gold, okay, and then print the money to debase the currency against gold and then use the gold to plug the holes. That would be one way of doing it. But the reality is, okay, if you're sitting there thinking to yourself, well, I can't wait for a few years' time when I get my state pension, okay, I would suggest to you that you have a plan B. Might not be the worst idea in the world. And to kind of wrap up today's episode, okay, you may not have noticed this, but the most bullish indicator in Bitcoin's history just flashed a buy signal this week. In 14 years, it's got an all-time record of 14-0, okay? It has never, ever failed. Here's what prices you can expect over the next few weeks using the hash ribbon. So based on all of this, we should be looking to see a price somewhere around $132,000. And remember, this isn't a prediction, okay? This is based on historical data and network fundamentals. So what a wild time to be alive. And again, this indicator has 14-0. It has never, ever failed. So we've kind of already spoken about the charts, right? Long and strong continue to push for Bitcoin, all the while we're above the cycle low. Happy days. Now that we are significantly into this cycle, about a quarter of the way through this daily cycle, if we were to start to break down from the second angle, now we can start to say, okay, we've got issues. Okay, we've got issues if we start to lose the second angle, because there's plenty of space left in this daily cycle to see a decline. As I already said with the stock market and the NASDAQ, okay, trendline violation, yes, that's objectively true, but given where we are in the cycle, we should be expecting this thing to be a trap and reverse, and if we can do that, I am going to be looking to add exposure here and move stops up from the first positions. The NASDAQ, as I said yesterday, I was looking for a touch of the second angle. We may or may not get it, okay, but again, we're in that timing window to see a swing and a reversal. The Dow Jones has got a very, very uncomfortable, ugly look. I don't know whether I want to leave this second angle or if I want to cheat it one final time. I don't really want to cheat it, to be honest, but you can tell that this is not really a cleanly respected line at this moment. So I'm going to give it a little bit more space, let some more action develop, and then I will try to find the area on the chart that the market is respecting. The VIX, as you can see from my arbitrary yellow squiggle, particularly if I zoom out, okay, is actually playing ball very, very nicely. Now, something that's interesting about Fridays is Fridays are, of course, VIX Crush Friday. Every Friday, the Fed comes in and shorts the VIX. It suppresses the VIX to keep the volatility low, to keep allowing hedge funds to be continuously entering this market and not signal that we've got some massively volatile times ahead. And of course, today being Friday suggests to me that we are indeed going to see them come in and start to crush the VIX. So it works 8 or 9 Fridays out of 10. I see no reason to bet against it. And of course, we are right in the timing window to see that cycle low for the S&P. So I would expect the VIX to start to roll over as the stock market finds its cycle low, as I said. The Russell 2K doesn't care, as you can see, continuing to push. Happy days. Gold is finally playing ball. The read is becoming clearer there. So I'll cover this for level 3 members along with the crypto miners on Saturday. oil looks to be more or less playing ball as well, right? Found a daily cycle. Now we're looking to see this cycle fail eventually and then start a decline. And of course, this is going to signal to everyone else that they're completely wrong about sticky inflation, and inflation is in fact already dealt with. And of course, the Dixie continues to look a little heavy here. So fail this daily cycle and we bring into account, okay, we bring into play, I should say, a new 3-year cycle low. But if this thing continues to hold and move up, then we've got a confirmed new weekly cycle and a daily cycle here, and probably we can tick this one off as a 3-year cycle low. So wild time to be alive. As ever, I'll come back on Saturday, I'll come back tomorrow, and I'll do the weekend deep dive as always. If you're a level 3 member, I'll be posting a video for you guys. We're going to be talking about Tesla and Nvidia this weekend as well, because I think we've got some very nice setups. Tesla essentially did exactly what I thought it would do, which is fail that breakout. So happy days there. We'll talk about that tomorrow. For everyone else, I hope you have a fantastic weekend. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.